Just today, on Monday, January 6th, the Federal Reserve provided a warning that nobody listened to. Donald Trump got certified on the 4-year anniversary of J6. I'll leave a comment down below if you were with me that day 4 years ago when we covered an over 10-hour live stream of that day. And Justin Trudeau quit with poly market, good old insider trading, finding out before anyone else. We'll talk about that, as well as CES is starting this week, and people are claiming Dell is now copying Apple. So let's hit it all in today's Meet Kevin Report. News that makes you money. Look, I quickly want to just start by saying I'm bringing this back because you asked for it. Somebody here wrote, well, actually 54 Woods Girl wrote, "Everybody, don't we wish that Kevin would put out a news show once a day? At least you are the best at this, Kevin." To which I asked on X and many other platforms, is this real sentiment? And many of you replied saying, yes, this is exactly what you want. So, because you asked for it, let's give it a shot. So first, in macroeconomics. This morning, we woke up to a market rally thanks to what was going on with Foxconn, which we'll talk about in a moment, propping up the AI sector, but also this idea that Donald Trump might actually want or desire more narrow tariffs. A lot of this was inspired through potentially leaks or rumors that Donald Trump is open to using a universal tariff amongst all countries rather than specifically targeting countries like Mexico or Canada or China, basically saying, look, if you want to do business with the United States, there's going to be a sales tax for you on it. Obviously, Democrats latch onto this and say that any kind of tariffs are simply going to lead companies to raise prices and therefore consumer prices are going to go up. But those of you with an economic interest know that the only way that could happen is if those companies actually have a large enough PP. Because without a large PP, there is no way you could pass that extra cost on to consumers. Instead, without pricing power, you're simply going to take it in the margin. And nobody wants to take it in the margin. Taking it in the margin is also what could end up leading to layoffs, which so far we actually haven't seen, which is one of the reasons why the economy keeps booming. That hasn't stopped the Wall Street Journal, though, from talking about a little labor market being a little more poopy-doopy than maybe it outright looks like it is. But before we hit the Wall Street Journal, just as quickly as I brought up this idea that Donald Trump might be interested in more narrow tariffs or a universal blanketed tariff, Donald Trump basically within an hour or two came out and said that this was a fake news. We're still doing bigly tariffs. Now, in my opinion, when there are leaks like this, and then you have people like Trump or Musk suggesting that it's fake news, there could be a sign that there's a little bit of truth in it, and I wouldn't be surprised if a universal tariff is what we end up getting. It makes it the easiest way to sell to all countries and say, look, everybody's going to start at 10%. Now, maybe I'll give you a coupon code if you give me certain favors. I actually kind of think it's a good negotiation strategy. So I kind of believe that there's some truth to these rumors, but we'll have to see. Anyway, the Wall Street Journal did write a lengthy piece today with actually no Nick Tiarmos in it. I was surprised by that. On the 27-week unemployment rate rising. Now, many of those of you who've been watching the channel for a while know that I've been specifically freaking out about this 27-week or 6-month unemployment rate rising. And the Wall Street Journal didn't specifically mention the 27-week figure, except instead, they mentioned the 6-month figure. I just want you to know those are the same. So the 27-week unemployment figure is up 50% since 2022. That figure is also hitting its highest level in categories like white-collar worker categories like tech, law, and media, what I basically categorize as your classic Tesla buyers. And the unemployment to job openings ratio, typically measured by the JOLTS survey, job openings and labor turnover survey, so I guess that's a little redundant, the JOLTS, ratio is now a 1-to-1. This is where Powell wants it to be. The problem is we got here with one missing piece. And I want you to kind of think about having a softer labor market as a puzzle. Imagine you're putting together the puzzle and you're going to go, okay, we're going to constrain demand, so we're going to have less demand. Then that'll lead to less hiring, so less job postings, and it'll take longer for workers to find work, and we'll have layoffs. If all of those things come together and we get to an unemployed to job openings ratio of 1-to-1, we're good. That's what the Federal Reserve wants to achieve. The problem is we have achieved that 1-to-1 ratio with 3 out of those 4 components. We've got the less demand, outside of the AI sector. We've got the less hiring, and we've got the it's taking longer to find jobs portion. So we got 3 out of 4. But we're already at 1-to-1, and we haven't hit layoffs yet. And this Wall Street Journal article is arguing, what happens if all of a sudden layoffs come in? Then we take what are marginal job numbers that we have today and potentially push us into a recession. I'm not saying that to be a bear, I'm just saying it to give you a heads up that when the Wall Street Journal starts putting on their front page, hey, just a heads up, watch for layoffs, because when that starts hitting, the data that's already marginal for jobs data, basically showing there's really only hiring in government and healthcare, which are lagging sectors, although mining, manufacturing, and transportation are still holding up quite a bit, everything else is kind of falling, you might want to pay attention. And this comes at the same time, the same day actually, which is often not uncommon because the Wall Street Journal seems to coordinate with the Federal Reserve. That labor warning comes on exactly the same day that the Federal Reserve issued a warning today. Yes, Lisa Cook over at the Federal Reserve said the quiet part out loud. We reviewed a little logic puzzle, by the way, together with course members this morning, and I'll give you a little preview of what that puzzle looks like. And the reason I mention this puzzle is because I also want to provide an update that, wait a minute, when Lisa Cook gives this warning, she a little bit gives kind of a quiet warning that's the opposite of what I think the Federal Reserve is trying to do. Take a look at this. It might be a little confusing at first. Don't worry, I'll clarify this. So here's a little logic game I did with course members this morning. We did every day the market's open. We do usually a market open live stream together. It's about an hour of real estate and stock analysis and Q&A and everything. So a little logic puzzle we wrote is A, if Fed signals concern, market falls. C, you fall into recession. In other words, it's like a self-fulfilled crash, right? If the Fed says everything is great, the market goes up, you might avoid a recession. The Fed wants to avoid a recession, and if the market goes up, the Fed may be able to avoid a recession. Therefore, the Fed should signal optimism to the market. AKA, therefore, the Fed will pump markets, right? So it's a simple logic game that says the Federal Reserve is actually in a place where they're perversely incentivized, in English, it makes sense for them to pump up the market, which I think is really interesting. But at the same time, in like really quiet corners, there are people at the Federal Reserve that are whispering problems, okay? Take a look at this. Lisa Cook says, on Monday, valuations are elevated in a number of asset classes, including equity and corporate debt. Yeah, there's like no risk premium between corporate debt and treasury debt. Anyway, where estimated risk premia are near the bottom of their historical distributions, suggesting that markets may be priced to perfection and therefore susceptible to large declines, which could result from bad economic news or a change in investor sentiment. Okay, well, remember, this comes just at the same time as the Wall Street Journal is saying the last domino to fall is layoffs. We haven't seen layoffs yet, which Jerome Powell says is good, and everybody says is good, but the people who are really paying attention realize that's the last domino. And when that last domino goes at the same time that you have sky-high valuations, well, then you could have bad economic news. And this is why I give a warning. Please pay attention to layoffs. It's the last domino. And they are now saying the quiet part out loud that Jerome Powell won't say, because Jerome Powell wants to play the logic game, as in, basically manipulate markets, pump the markets to try to prevent a recession. The thesis here is that if wealth goes up because of the stock market or real estate market, then people will spend more money and businesses will go back to hiring. Maybe that'll happen. In fact, that's what I hope will happen. I hope that in January, February, and March, every business goes out there and just starts hiring a bunch of people, and we actually have job growth again, not like the nominal growth that we've been having. That's been mostly healthcare and government jobs. You know, we can have a lot of unemployed government workers soon if Vivek's plans come through. But anyway, this is a very interesting warning because this is all coming as the Wall Street Journal is also saying that the CAPE ratio, which is basically this is Robert Shiller's cyclically adjusted price to equity ratio. Really like fancy word. Basically what you just have to know from it is that .com bubble burst levels. Now, all of that sounds like the economy seems like it potentially maybe should be setting up for an oopsie doopsie, but that's not really how it works. See, UBS even argues, yes, forward PEs are high, the CAPE ratio is high, we're higher than the 10 and 20-year average on forward PEs, but stocks don't fall because of high valuations, they fall because of earnings slumps or deteriorating fundamentals. However, if you invest new money at high fundamentals, yes, it is more common to have negative returns. So it's just a little bit of a warning that I'm starting to read about from different areas, especially since you have now Bloomberg arguing that Amazon and Tesla have hit, quote, their most aggressive valuation in 20 years. Yeah, well, it's made a lot of people money, so probably a good thing. Anyway, this has led some people to ask me, Kevin, what are the cheapest sectors in the S&P 500 right now? And frankly, there is only one. The cheapest sector in the S&P 500 right now is real estate. Yes, because markets are really positioned at the moment for basically markets to just keep going up. Obviously, if we hit recession and yields fall, that would actually be really good for real estate, and you could see real estate sit at the top and outperform everything else. That's obviously unless you have a big foreclosure crisis, which seems less likely because of, quite frankly, people have very low lock-ins on 30-year fixed-rate mortgages, 15-year fixed-rate mortgages. We have the Dodd-Frank Act and the ability to repay. It's very, very difficult to qualify for a mortgage. So, of course, there'll be some foreclosures and short sales for those taking non-QM loans, non-qualified mortgage loans, basically more fringe loans like hard money loans. But normal loans might not see that sort of disaster that we saw in 2008. Who knows? These are just some things that I'm watching and tracking right now. Bloomberg does also report an increase in short selling in bonds towards the end of last year. All of this pretty interesting. Now, a course member this morning asked me, hey, Kevin, but if the market ends up falling, won't the Federal Reserve just cut rates and therefore stimulate markets just like what happened in 2020? Therefore, why not just stay invested? And don't get me wrong, I'm not arguing that people don't be invested right now. I'm just saying if you have new cash, there is an argument to potentially holding some of that new cash on the sidelines. I'm not saying you should try to time the market. It's not the right move for everybody's portfolio. In fact, it's more likely the wrong move for people's portfolio. But when it comes to the question of will the Federal Reserve simply bail out markets like they did the last time, this depends. Mostly because last time we had coordination between the Fed and the legislature. We not only printed money at the Fed, but we helicoptered that money away through a Congress that was really primed to giving people stimulus and unemployment pay and basically money for doing very little. These sort of bailout programs, I think, would be highly unlikely under a Republican-controlled Donald Trump administration and legislature, which is probably going to be too far in the, oh no, we might stir inflation again camp, which actually means the pendulum could swing the other way. We could be going from too much stimulus to not enough stimulus in the future and then actually face a deflationary oopsie. Now, of course, nobody knows when that kind of stuff is going to come, but it is interesting seeing this coordination between the Wall Street Journal and the Federal Reserve today. In other news, AI was very bullish today, mostly because, Foxconn's results were bullish. They see significant sales growth for Q1, especially are expecting AI server shipments to be stronger than they were in 2024. Now, that's specifically for Foxconn, so I kind of question, how strong were your server shipments in 2024? And, that's a discussion that we can dive into in a separate video, but it's worth paying attention to. This led NVIDIA, AMD, and a host of other AI stocks, including Supermicro to rocket up. In addition to this, you also saw some enthusiasm extending for hydrogen stocks like Plug Power. This is potentially due to Treasury guidance that came out late Friday for hydrogen tax credits. Something to keep in mind for a company like Plug Power is that a lot of these tax credits may end up disappearing under Trump. So pay attention to that. It's also worth noting that Fubo had one heck of a day today, up over 200%, rising from $1.30 at its low to over $5.59. Why did this happen? Well, remember that FuboTV sued Disney to block Disney from launching this program called Venu. Venu was supposed to be a sports-focused bundle of channels between Disney and Fox that they would broadcast. But since Fubo primarily operates in the sports market, Fubo sued. I'm oversimplifying what is going on here, but let's just put it this way. Fubo had a strong enough case to get the judge to block the launch of Venu, the judge involved in this litigation, until the litigation was resolved, which basically means the judge found Fubo's arguments credible enough to say, yeah, Disney, let's wait until this resolves. So what did Disney decide to do? Disney decided to take ownership of 70% of Fubo in partnership with Fubo, manage Fubo. Fubo shareholders will own 30% of the company. Disney will own that other 70%. And Disney agreed to combine Hulu plus Live TV with Fubo TV. So you basically just made Disney even stronger, but obviously Fubo now has a much lower risk of going bankrupt or disappearing, hence their market capitalization explosion today. In fact, their market cap right now is $1.69 billion. Let's go. That's up over 3.5x today. So if we look at that valuation beforehand and divide it by 3.5x, you were under a $500 million company before this announcement today. You were about $482 million. So you saw a huge run up. Now keep in mind, trading liquidity is pretty dang low in Fubo. It's not like Microstrategy where you have a lot more liquidity, though sometimes more liquidity can come as insiders decide to sell and you get a little bit more of an order book that can move. However, when you have a thinly traded stock, you do have to be careful of a momentum run up that just moves too fast for its own good, and it leaves some people holding a bag in the future. So just be careful on thinly traded stocks. Speaking of thinly traded, Interactive Brokers sent out increasing margin requirements for Microstrategy. Sounds like they're starting to freak out over potential margin calls in Microstrategy, which is interesting because the stock was up about 11% today, which is pretty remarkable. It keeps running, and Bitcoin back to its 102 line. Watch that 102 line carefully. I think that line is pretty useful. You can see how we fell under that line for a period of time right here. But the last time we broke the line, fell under it, broke it again, we rocketed up to 108,000. Breaking through and sustaining this 102 line is critical to make it up to my next extension line of 155. And if you specifically look at a stock like Tesla, it's really important that Tesla maintain this 414.50 line, though we did end up losing that line again today. In this morning's Alpha report, I talked specifically about this 414 line. In fact, in this morning's Alpha report, I also talked about how the NASDAQ 100 was likely to have priced in most of its green for the day at the beginning of the day, and to be careful because I didn't think we would see much higher through the rest of the day. And if you take a look, by the time the Alpha report was sent, right around this morning hour here, we ended at roughly the same place as where we started, maybe up about 30 cents on the QQQ. But this sort of enthusiasm in the AM did wear off pretty quickly. So just watch for that. We want to see these levels sustained. It is good for the NASDAQ, though, that we basically triple tested this now 521.75 line. It's actually a bullish thing for markets. Moving on, Ulta just announced a new CEO. In my opinion, this has Buffett's influence written all over it. So not a surprise given that he's got a decently large stake there. When it comes to politics, we did hear that Justin Trudeau has resigned, which Polymarket basically predicted. It's interesting about Justin Trudeau resigning is his party's kind of been falling apart since 2021. It's kind of worth noting what's been happening to Liberal power since 2021. Look at this. Here's 2021 on the left, where Liberal power in Canada, and you see this in the United States as well, was much stronger, or decently stronger, maybe about 5 points stronger than conservative power. But that sentiment in polls reversed and split, especially in the middle of 2023 and throughout 2024, where basically liberal polling power has fallen to almost third place, and conservative power climbing to the strongest levels we've seen in quite a while. Now, a lot of folks are wondering, why is this happening? Is this simply because Justin Trudeau was unliked? After all, a bunch of people were resigning from his cabinet over the last few months. It seemed like every week somebody was resigning from his cabinet. A lot of people are claiming that they were frustrated with Trudeau's blackface from earlier in his life when he wore black or brown face for his Arabian Nights costume. So others say they're frustrated with Trudeau because of COVID lockdowns. Others say it was him using emergency powers against the trucker protests. Others say it just has to do with this obsession of not just Justin Trudeau, but liberals in general focusing too much on immigration, or I should say a lack of immigration, like focusing on asylum support for anyone to come into a country, climate change, and identity politics, and prioritizing those things over the things that people say matter to them. People say what matters to them most is, why don't we focus on the issues that we have at home, like better schools so we can have a stronger economy and lower inflation, legal immigration, and secure borders. And so this has been leading a lot of liberals to lose support, not just in Canada, where now Justin Trudeau was resigning. Keep in mind, he's just resigning as PM until a different Liberal Party PM comes in, though the fate of the Liberal Party or the Liberal coalition may not last very long, given this sort of sentiment. So just pay attention to that. A lot of people are looking at what's happening across the world and saying, maybe the progressive movement is just over. Trump has come back, marking a rise in conservatorship. We've seen a rise in the same thing in Canada and in Germany, as well as other countries. Look at the AfD, the Alternative für Deutschland, the Alternative for Deutschland, and the fact that now 75% of European governments are led by or include a right-of-center party in its leading coalition. People are saying this is all happening. Why? Because of populism, which, frankly, this should be very simple to understand. What is populism? Hey, let's focus on our own problems first, our own economy first, our own people first, and our own people's ability to get jobs first. Today, the Wall Street Journal argues that the working class voters feel that elites, academics, bankers, politicians are just disconnected and don't care about us, that they don't care about fighting for us, small business owners, small business entrepreneurs, or people just trying to make a buck and make a living. It's no surprise that we're now in an age of potentially population collapse. Elon Musk talks about that all the time, and we can talk more about that later. But basically, this might be the first century that populations have declined ever in the history of the earth for humans since the Black Death in 1300. Kind of crazy. Anyway, social media, by the way, this is my opinion, may accelerate some of the divisions that we're seeing, but I personally don't think that social media making the divisions apparent is a bad thing. I do think, because ultimately I think things that need to be exposed should be exposed, but I do think that social media makes it harder to heal after issues have been uncovered, because everybody kind of gets a little bit more entrenched in their places. And so healing is really the hardest part, and it's really difficult for politicians to help heal a community, because usually they just pour gas on their enemies, and that sounds graphic, but people just sort of bag on each other more. So anyway, this same thing, by the way, that you've seen in the United States and Germany and Canada, you're seeing in France, you're seeing in the United Kingdom, it's happening all over the place. Center-right parties are focusing on helping people feel like somebody is fighting for them. The downside of this is it could lead to potential gridlock, and we've seen some of that already in the United States. Consider the following. Yes, Donald Trump and J.D. Vance were certified as president and vice president-elect. However, the first action of this new Congress we have to elect Mike Johnson as Speaker of the House in the first ballot. It did get done. It didn't take 15 attempts like it took last time to get Kevin McCarthy elected, and his speakership didn't last anyway. But there were some problems. This was not easy going. Republicans could only afford to lose one vote versus what Democrats had. And since 6 Republicans abstained and 3 voted for someone else other than Mike Johnson, it took some real convincing to get the rest of the Republicans to vote for Mike Johnson. Now, the reason they pulled it off was because if they didn't, then Democrats would have chosen Hakeem Jeffries, and Republicans feared that Democrats would have blocked the certification of Donald Trump and J.D. Vance kind of like 4 years ago. So Republicans are like, all right, we don't want him, but we'll take him. Okay, now there's a lot to do, like the budget, the debt ceiling, deficit spending, Ukraine, immigration, energy bills, the extension of the Trump tax bills, tax cuts from 2017, which expire this year, next year. And, Trump has been talking about wanting one major package to get everything done, like a border bill, energy bill, tax bill, and everything together. But now there are rumors that they might even be open to doing a 2-bill approach where they split some priorities, maybe split taxes and immigration into different bills. Who knows? But some of that hardlinership, if you look closely enough, is already starting to come. So that's going to make 2025 really, really critical for Trump, because you really only got 2025 to pound legislation through. In 2026, everything everyone does is going to be focused on the midterm elections. 2025 is really the time to get things done. Now, of course, Elon Musk adds to this conversation by saying, had this election not been won by Donald Trump, civilization would be lost. Another one that Elon Musk adds is in response to Johnny Ascola, who on X writes, Elon Musk is rapidly becoming the largest spreader of disinformation in human history, hijacking political debates in the process. Elon Musk promptly replies, F you, retard. To which Luna then replies, sorry, Elon, I couldn't resist. 12/29/2024. Please post a bit more positive, informative content. Elon Musk, 8 days later. F you, retard. Michael Barr, the vice chair for supervision at the Federal Reserve, has stepped down voluntarily. Now, I find this actually really interesting because Michael Barr is somebody who said he would stay in his position at the Federal Reserve, somebody who wants more banking regulation and banking supervision. He kind of promised that he would stay at the Federal Reserve and he would sue to stay there if he needed to. And what actually happened is he's now agreed to step down. So it kind of makes you wonder, wait a minute, did you think you were going to get fired by Donald? Because all of a sudden you're doing the opposite of what you said you were going to do, which is quite interesting. So a lot of people are wondering, could this be a leading indicator of what happens with Jerome Powell? Where Jerome Powell says, I absolutely won't step down, and then all of a sudden you end up stepping down anyway. Oops. In other news, CES is back. It starts on Tuesday. Jensen Huang, that's tomorrow. Jensen Huang is expected to give the keynote address there from NVIDIA. A lot of people think he's going to talk about Blackwell. Who knows if he will. AI devices are obviously expected to be the showstopper there. PC, AI updates, blah, 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 blah. At the same time, India's government is now wanting to issue helicopter money to companies like Apple to move production from China to India. This has previously been challenging due to fragmented politics in India. Basically, trying to get cities to work together to get things done in India has been very, very difficult. Well, the Indian government is now trying to step in and simplify and streamline this process and throw billions of dollars at the problem as well to make it happen. This obviously while China's economy is not doing so hot. Anyway, Dell is also rebranding their computers now to Dell, like their laptop series, Dell, Dell Pro, and Dell Pro Max, which a lot of people now say is Dell just copying Apple. Dell says nobody owns the word Pro or Max, so they're just simplifying their brands. They're also now authorizing the first AMD chips ever to be used in Dell computers, which they say will be better for an AI future. Okay then. What else do we have? Oh, we had the first H5N1 death in the U.S. It was in Louisiana. Someone over 65 years old with underlying health conditions. Apparently, they were exposed to a backyard flock of birds. And the health briefing said, please don't touch dead birds or dead animals, or even sick animals. No human-to-human transmission has been evidenced. Also in Louisiana, specifically New Orleans, where we had the Bourbon Street rampage, the assistant district attorney there just shot themselves Saturday night and died. He was 34 years old and joined the bar in 2023. That person apparently wasn't working on the Bourbon Street case because they specialized in sexual assault cases, but people are still wondering what is going on in New Orleans. So with this, we should bring up a dad joke of the day. The dad joke of the day is, what do you call a Ford Fiesta that has run out of gas? The answer, a Ford Siesta. Okay, with that, let's take a look at a bonus. The Babylon Bee has awarded the worst vehicle by the National Association of Terrorist Car Bombers. And the medal goes to the Cybertruck. Tesla Cybertruck voted worst vehicle by the National Association of Terrorist Car Bombers. I also sent out another Daily Wealth email. I was talking about a viral post circulating by the CEO of Loom. The CEO of Loom sold his company for just under $1 billion, which is really cool. You know, nobody knows how much he actually net, especially because, you know, he may not have owned 100% of the company and then he got to pay taxes and stuff. So it doesn't matter. The point is he's probably got hundreds of millions of dollars. And now there's a viral post going around from his blog about how he feels confused about what's next. He feels empty. He feels uninspired. He feels like everything's a haze and a side quest. He almost sounds numb. And so that's where in my Daily Wealth email yesterday, which remember you can sign up for that over at mekevin.com along with the Alpha Report at mekevin.com, I said that in the end game, that where you have the money that you need to live, you have to ask yourself, what is there beyond money? And I found that answer myself, which I found after a while of people asking me, Kevin, you know, why don't you just retire or whatever? I found that the piece that's always missing when people are unhappy is some true purpose. See, without purpose, you become a miserable vacuum. You hate your job, you hate your life, you hate everything you're doing, and every inconvenience feels like another punishment. Whereas if you have purpose, every inconvenience or oopsie doopsie is really just a bump in the road, a small speed bump on the road to what your ultimate purpose is. And so I'm convinced that purpose is what keeps us alive, young, and willing to endure. That without purpose, life is potentially meaningless. People always ask me, Kevin, hey, you know, what number is it going to take? And for me, it's not a number. It's purpose. It's building my company like HouseHack and the team, the amazing team that we have at HouseHack and the new companies that we could partner with, or the new business ventures that we could do with HouseHack or outside of HouseHack, depending on what's appropriate. Find purpose in my relationship with my wife and my kids, providing value to you on YouTube or through my Daily Wealth letter or my Alpha Reports. Even if I wasn't in this position, I try to find purpose as a cop or a doctor, something that would make me feel like at the end of the day, I provided value somewhere in the best way possible. And I think that's ultimately what's missing from a lot of folks who feel a lack of purpose. So anyway, there's your first Meet Kevin report. Hopefully you like it. If you watch it on 2X, it should take you about 15 minutes to get through. So thanks so much for being here. Appreciate y'all, and we'll see you on the next Meet Kevin report.
Not advertise these things that you told us here. I feel like nobody else knows about this.
We'll try a little advertising and see how it goes.
Congratulations, man. You have done so much. People love you. People look up to you.
Kevin Paffrath there, financial analyst and YouTuber. Meet Kevin. Always great to get your take.